My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people make friends. I'm just trying to make a little money. My job, not just to entertain, but to educate, put it all in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Nothing drives people out of a market faster than naked manipulation, especially when the people who run the business are doing the manipulating. Now, I know tonight we have a show on the network that talks about the meme craze and how much money was made and lost fooling around with stocks that were run and gunned. That was total manipulation. It's ridiculous how people get away with this stuff. Great documentary. But after a sedate day where the averages, Dow inched up 10 points, S&P advanced 0.24%, NASDAQ gained 0.36%, I want to talk about a different kind of manipulation. The kind we saw in March, when a group of short sellers did everything they could to promote fear, creating an atmosphere where many of you felt compelled to sell stocks near their lows. They all got away with it. Then I need to talk about crypto, because there's clearly still a lot of money to be lost here before the whole sad, unregulated chapter comes to an end. Although I think the end is definitely coming now that the SEC is cracking down on the stuff. The SEC actually just filed a motion for restraining order to freeze Binance's assets. That's gigantic. Until this, they've been getting away with it. Why? Not enough outrage, not enough, let's say, supervision. That's over with. I'm going to go over all this manipulation because I don't want you to get ripped off in the future. I want you to be able to protect yourself from scams that are designed to fake you out, part you from your money. I view this as actually my job now, because how can we make money together if you're just going to lose it in these scams and schemes? So why don't we start with the banking mini crisis that felled Silvergate, Silicon Valley Bank, Signature Bank, and Old Me First Republic. Each had its own reason to go under. Though it didn't get as much attention as it should have at the time, the first bank to go under was Silvergate. We don't even know the circumstances of Silvergate, frankly, except it tried to be the official bank of all things crypto, and Binance, one of the big crypto exchanges, had been withdrawing tons of money, stressing the balance sheet. They were interrelated. Silvergate never really recovered once crypto enterprises started imploding. Why? Because Sam Bankman-Fried was let's say, only the first of many. Maybe it seemed like a good idea to be the crypto bank 2 years ago, but not now. Next came Silicon Valley Bank, whose failure started the mini banking crisis in earnest. SVB had a bond portfolio that was underwater, and a few mean-spirited venture capitalists pulled their money out at once, then went vocal on Twitter to sink the bank. It worked because the deposit base was so highly concentrated, making it very easy to spark a run. One that claimed another crypto-linked bank. That one was called Signature Bank. That was just a few days later. Silicon Valley Bank didn't really have to go under, though. There were buyers, but the run happened too quickly. Finally, there was the collapse of First Republic, more of a slow-motion bank run. Rich depositors fled for safer institutions. Not enough FDIC protection. This one got bought by J.P. Morgan after its collapse. What matters, though, is what happened in the wake of these bank failures. We had a concentrated effort to bring down the entire regional banking system, led chiefly by short sellers, leaning all over the KRE. That's the regional bank ETF. Now, I know it sounds apocryphal, but the stocks of New York Community Bancorp, M&T Bancorp, Regions, Truist, Huntington, Citizens, and several other regional banks were absolutely crushed by the shorts, by hedge funds leaning down and making money. It was actually child's play for the shorts. They made tons of money. Sadly, they also vanquished the regional bank shareholders, and they're all going to make it much harder for credit to come by, even as they enrich their wealthy clients doing so. Why don't people talk about this? I have no idea. I've been around for a long time. I know that's what happened. It shouldn't have happened. I'm against it. Two financials bore the brunt of it. PacWest Bancorp, which traded down to $2.48 in the beginning of May, and Schwab, which traded $45 and change around the same time. We heard that both of these were broken institutions. Now, when you hear about these stocks going down, you realize why it's so hard for banks to defend themselves. PacWest now back up to $8 when times were still bad. You couldn't have a day where people told you that it was going to make it. Everyone said it was going to fail. In the meantime, Schwab's one of the most solvent brokerage firms out there. It just happened to own a small bank with a not-so-hot bond portfolio. It was trashed day after day. Then that insult to injury, First Horizon, you've seen them before, an excellent bank, got a takeover bid from Toronto Dominion last year. TD was willing to pay more than $13 billion for the institution. Because of some unspecified regulatory issues, the deal was blocked, and First Horizon stock, which had already slid from the mid-20s to the mid-teens as the deal languished, plummeted from 15 to 10, single session. Today, First Horizon held an analyst meeting, which showed the franchise is worth a great deal. And the stock's rebounded to 11 and change. It's still well below where it should be, though. So what ended the bearish manipulation that was a not-so-veiled attempt to get regulators to shut down these banks and profit from them? I think it's simple. It's becoming clear that we're not going into recession, at least not a bad one, which makes it really hard to knock out these decent banks. This morning, Goldman Sachs lowered its judgmental probability that the U.S. economy will enter a recession in the next 12 months from 35% to 25%. That really resonated throughout the entire market. And that was where it was before the Silicon Valley bank collapse. At the same time, the ones that are struggling now seem perfectly capable of raising money. That's what matters, lifeblood. Now, if that's the case, and the financials can come back to life, I have an idea for you. I would go buy the stock of Morgan Stanley, which is still trading where it was during the mini-crisis. My Travel Trust owns it. We told club members very vociferously today that the stock should be higher, maybe much higher. You should buy it. But more importantly, if you're going to own the banks, please remember how easy it is for the short sellers to rumor stocks down and how hard it was for them to find their footing. Now, that said, if you want real market manipulation, I got it for you. You just need to read the SEC's briefs filed against Binance yesterday and Coinbase this very morning. The Binance brief basically says the crypto exchange is just like FTX, Sam Bankman-Fried's bogus outfit. There are no controls to speak of, according to the SEC, and funds are all commingled all the time, again, just like the FTX. I have no idea why anyone would still keep their money with these guys, who are also being charged for generating a lot of trades that make them look like a real outfit, which they're not. There was so much appalling stuff in this brief, but I want to call your attention to what I consider to be all the counterfeit coins that are still traded. Solana, created by Solana Labs, ADA, native token of Cardano, Matic, native token of Polygon, FIL, the native crypto asset of Silicon Network, Atom, the native crypto asset of the Cosmos Hub, Sand, created on the same Ethereum blockchain, Mana, minted by Decentraland, Algo, the native token of the Algorand blockchain, Axie Infinity Shards, another Ethereum token, Cody, a native of the Cody blockchain. These are all poppycock. If you're in them, you're a fool. You're just a fool. After reading this brief, I think that all these coins are more or less counterfeit. And I said so to Chairman Gensler this very morning. Why bother to mention them? Because unlike the banks, these crypto assets all seem to be scams, and I want you out of them. Many of you traffic in them every day. You should. You're wrong. Gensler describes Binance as the Wild West. I wish someone would have told the people messing with crypto that in the Wild West it's possible to lose everything because there's no regulation. Don't believe me? I want you to think about this quote from the Binance chief compliance officer, who bluntly admitted to another Binance employee that, and it involves a curse word that I'm not going to say, quote, "We are operating as a unlicensed securities exchange in the USA, bro," end quote. Really captures the spirit of the enterprise, bro. How can anybody even consider keeping their money with this kind of exchange? It's almost a comedy. They can't possibly keep staying one step ahead of the regulatory policy, but maybe you let them. Maybe you're foolish enough to give them the money. Maybe it's your fault. Ever think of that? Maybe it's your fault. Coinbase is a little different. No outright fraud, just no registration as broker-dealer, which the SEC says has led to ill-gotten gains. Ill-gotten gains, that's bad too. Now, what do you do if you're involved with these kinds of outfits? The same thing you should have done with the SPACs or the IPOs that were bad or the meme stocks a year and a half ago. Get out now. Go buy T-bills. I'm not kidding. Just do that. If I could have stopped you from buying all the SPACs, I would have done my best. I can stop you maybe from doing this, or at least I can try. Bottom line, sometimes you get stocks that are manipulated lower, like the regional banks. Then you get the assets that are manipulated higher on bogus exchanges, like a huge chunk of the crypto ecosystem. Both are in the front. Both are going to get, you're never going to get any credence on Mad Money when you do this stuff to our viewers. I am after you, and I'm not done. I'm getting started. Joe in Oklahoma. Joe.
Hey, Jim. Booyah.
Booyah, Joe. What's up?
Hey, so I started out a year ago as a firm believer in Jim Farley and Ford. Over the last year, my confidence has started to wane. What should I do with Ford? Is it
I don't blame you that your confidence is waning, because every time, because they have so many recalls, the stock should never have gotten where it did. That's a shame that it did. I was part of it. I thought I sold some at a higher level for my Travel Trust. I bought it back. The stock is starting to act better. I think that they're going to do $6 billion in cash flow. The street thinks they're going to do $2 billion in cash flow. Let's stick with Jim Farley. I think he knows what he's doing. Let's go to Zach in Pennsylvania. Zach.
Hey, Jim. Big booyah from Eagles Nation. How are you?
Man, the Eagles Nation is looking real good. How about you?
I'm doing great. So I've been seeing a lot of storage units go up in my area. I know with a lot of people renting or using them now. This stock has a $3 dividend every quarter. I've added to the position. I want to add more and hold it for 20 years. Is Public Storage a 20-year hold?
You got horse sense. That thing is a terrific situation. I can't believe it's down this much. I very rarely ever see it not as higher than the stock market. I say, Charlie and Iowa. Charlie.
Okay. Booyah,
Charlie.
Jim.
Booyah, Charlie. What's up?
I'm a long-time viewer, but a first-time caller.
All right. Good to have you on the show.
I've owned Qualcomm for a long time, but I don't know what the future holds for it.
Well, I
You
do.
know-
I think it's time to sell Qualcomm. I think the stock's sneaking up nice. That's a good place to get rid of it. It hurt me very bad with my Chapel Trust. Why? Because continually that let me down. Now, why did that happen? Because they didn't do well. Now, you know what? It could be my fault. I picked a stock that didn't do well. But you know what? They're a little complicit, too. All right, so what do you do if you're involved with these kinds of crypto outfits? The same thing that you should have done with the SPACs or the bad IPOs or the meme stocks a year and a half ago. It's time to get out. I mean, money tonight. Close viewers know we've been focused on the home builders, but what about the building products companies? I'm checking in with AZEK after today's move higher. See if this thing could be worth building a position in. Hey, then it's Del Taco Tuesday. I'm checking in with its owner, West Coast-based Jack in the Box, to see if it might be worth nibbling at the stock. And the last 48 hours have been major for the SEC and crypto, so I'm going straight to the source to really wrap our heads around this situation. Do not miss my exclusive with former CFTC Chairman Tim Masson. You won't believe it. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.